Here's a deeper expansion of each of these trending stocks: SRPT, TNXP, TPST, Para, and VKTX, adding context, risks, upside scenarios, and why these stocks are capturing retail trader attention. Sarepta Therapeutics, SRPT. Sarepta is under intense scrutiny due to its flagship gene therapy, Elevidys, which targets Duchenne muscular dystrophy, DMD. Recent headlines highlight mounting safety concerns. Some adverse events have triggered questions about the therapy's benefit risk balance. The European Medicines Agency, EMA, rejected the therapy, amplifying fears that other global regulators could adopt a tougher stance. This has sparked fierce debate. FDA's role. Traders are analyzing whether the FDA is bending standards for rare diseases or if the agency might impose new conditions or even withdraw approval. Market manipulation claims. Some community voices suggest short sellers are amplifying fear to push the stock lower, given Sarepta's high institutional ownership and past short squeezes. Leadership and cash burn. There's growing anxiety about the company's ability to sustain its pipeline if Elevidys faces setbacks. Critics say management overpromised. Bulls argue Sarepta's expertise in neuromuscular gene therapy still holds long-term value. For some, the deep drop is a high-risk, high-reward entry point, betting that any positive regulatory update or licensing deal could spark a sharp rebound. Tonix Pharmaceuticals, TNXP. Tonix is rallying as traders speculate that its fibromyalgia drug, TNX 102SL, could secure FDA approval soon, a huge milestone given the limited treatment options for this underserved condition. Buyout talk. The chatter about a takeover stems from the idea that Big Pharma wants to expand pain management portfolios, especially with non opioid solutions gaining traction. Institutional buying. Recent Form 13 filings show new hedge fund stakes, fueling optimism that insiders know something bullish. Risks. TNXP is notorious for dilution and past missteps. Skeptics warn that even if approved, commercialization could be challenging due to marketing costs and competition from generics or off label use of other drugs. For now, the community sees a binary outcome: either approval sends TNXP to new highs, or rejection triggers another sharp drop. Tempest Therapeutics, TPST. Tempest is trading like a high stakes acquisition target, especially in the wake of Roche's TIGIT trial. Roche needs to shore up its oncology pipeline fast, and TPST's pipeline overlaps with Roche's interests. AGM speculation. Traders note the company canceled its annual general meeting. Some interpret this as a sign a deal is imminent, as AGMs can complicate or delay M&A disclosures. Massive upside rumors. Influencers on X, Twitter, and Reddit tout wild targets, 20x or more, based on low float, short interest, and the potential of a bidding war if Chinese pharma groups jump in. Reality check. TPST remains an early stage biotech with limited cash runway. If a deal doesn't materialize soon, it may need to raise capital, diluting shareholders. The setup is classic speculative biotech: low float, binary outcome, and mean traders ready to pile in if rumors intensify. Paramount Global, Para. The Skydance merger saga keeps Para in the spotlight. The deal is more than just a typical merger. It's about whether CBS, Paramount Pictures, and Paramount Plus can transform themselves for the streaming and gaming era. Regulatory focus. Antitrust regulators are taking a hard look given the media consolidation concerns. Tender offer. Retail traders speculate the tender offer could squeeze out short sellers, especially if institutions hold tight. Leadership reshuffle. The possibility of fresh management and cost cutting is viewed as a catalyst for unlocking value. Some traders are watching CBS's sports and gaming rights as a path for new revenue streams. Meme angle. Para has become a favorite for those hunting for the next surprise short squeeze, partly because the stock has high short interest and because it's easy for social traders to rally behind a clear event catalyst. Viking Therapeutics, VKTX. Viking is drawing huge attention as traders position for phase 2 data on its oral GLP-1, VK2735, which targets obesity and related metabolic disorders. Why it matters? The GLP-1 market is booming thanks to Ozempic and Wegovy, but most options are injectable. An effective oral version would be a game changer, potentially easier for patients and cheaper to manufacture. Buyout rumors. Big Pharma is eager to expand obesity pipelines. If the data is strong, VKTX could become a target for giants like Pfizer or Novo Nordisk. Short squeeze potential. The stock has significant short interest, so any unexpectedly positive efficacy safety readout could create a sharp rally as shorts cover. Risks. If the data disappoints, VKTX could tumble, as so much of its valuation hinges on this one asset. Bottom line, all five tickers are classic event driven trades: a binary catalyst, FDA approval, phase data, merger, buyout, retail buzz amplified by social sentiment, high short interest, or low float amplifying moves. For traders, the playbook is about timing. Jump in before the catalyst if conviction is high, or trade the post news volatility. For investors, the question is whether a long-term pipeline or M&A premium justifies the risk of dilution or failure.